travel isn't just about destinations, it's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabocha, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, powering Africa's potential from ground to grid. Proud sponsor of the Africa Energy Forum 2025. Good evening. Welcome to the program. I'm Stephen Grootes. We will be talking about what I think is going to be a big change to your daily life. And it is something that I'm almost certain is going to affect you in some way. And I'm talking, of course, about your relationship with WhatsApp. I don't think I know anyone. I've come across maybe 4 or 5 people who don't use WhatsApp. Often they work for companies that sort of don't allow them to. So they work in something a little sensitive, banking or something like that. But otherwise, I've got to tell you, this show would not go to air without WhatsApp. I mean, it just wouldn't happen. Advertising is coming. We'll hear more about it as we go through this hour together, you and I. It is, and when Facebook bought it, when Meta bought it, you kind of knew this day would come. The story of WhatsApp's just astonishing. It was started by about 25 people. They had something like 450 million users. Facebook bought it. So it started with nothing. Didn't use much money. Basically, it's all a sort of all a website interface with an app, and it then went massive. And then eventually Meta bought it for a huge amount of money, made billionaires out of some of the founders, and deservedly so if you look at how they've revolutionized communication. But advertising is coming. I'm obviously watching the oil price, watching the situation in Israel, Iran, and then the US. And the story today, I thought, was probably the Bloomberg report suggesting that that members of the Trump administration are not just considering an attack, but actually drawing up plans. I did wonder, though, signals are being sent, and we need to understand that too. And then sometimes a SENS release, the Stock Exchange News Service release, will tell you something about our society that we didn't really know. Libstar reporting today, they produce food in different ways under different brands. They cannot keep up with the demand for coated chicken. Who knew that our society was that interested in coated chicken? I've never really thought about it, but I quite like breadcrumbs myself. Be good to hear from you on that on 011 883 0702 021 446 0567, and of course voice notes this evening on 072 702 1702.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, confirmation today that the insurers and the reinsurers of Toyota's factory in Durban have now lodged a damages claim at 6.5 billion rand. It's against the KwaZulu-Natal provincial government, the city of eThekwini, and Transnet. And the claim, I suppose, is that they believe these institutions failed to protect Toyota's Prospecton plant from being badly damaged in the flooding in 2022. Khaya Sithole is an independent analyst. Khaya, good evening. Good to talk to you again. As I understand it, Toyota's insurers are saying that KZN, eThekwini, and Transnet did not properly maintain infrastructure that would have protected Toyota's factories. Do they have a strong case?
Good evening, and good evening to the listeners. I think the key problem that we're dealing with here now is the simple question of where the liability or the responsibility for ensuring that such events are better addressed, if we can put it like that. So in the way that this case has been structured, it seems that, look, those insurers have said, okay, fine, there was indeed an insured event, we did pay out, but we do believe that those that are responsible for managing the underlying environment could have done a better job of managing it. So they are then seeking compensation from those, which obviously include Transnet, given that it owns some of the affected infrastructure, and of course the government. So that's how they have approached it, because I think you can imagine anyone who's had to pay out a 6.5 billion rand claim will indeed try to see how much they can recover.
I mean, you would insure a plant based on certain presumptions, right? You would presume that roads would work. You would presume you might drive around. You might have, I'm just presuming here, maybe 5 years ago when they agreed to do it, say they would have gone to look at the dam, gone to look at this and looked about flooding. They would now, in an era of geocoding, in district by district, you get rated for insurance differently. So when something changes, increases the risk because something else has failed, that changes your metrics. And I wonder if that might be a relatively strong claim in some ways.
Well, I think what is quite interesting about insurance arrangements is that obviously at the point in time when they first agreed to insure, they would have looked at what the infrastructure conditions were and obviously assessed what the risks of events of this nature materializing. But what seems to be a common problem across South Africa is that the maintenance of infrastructure beyond the point of inspection is not as good as it needs to be. I think even in the city of Johannesburg, we're experiencing that. So on an ongoing basis, there would have had to be a revised assessment of saying, look, we think the risk profile is now XYZ, so therefore these are the premiums that are commensurate with that risk. We do not know what the actual insurance contract entails. We're only going to see that during the court processes. But what has then become very clear is that these insurers feel that perhaps the maintenance of that infrastructure was not at the levels that was associated with the risk that they signed up for. So therefore, they need to find someone who's going to cover their losses.
There's so many implications of this. I mean, we had flooding in the Eastern Cape last week and 90 people died. I can just imagine someone might say, well, the Mthatha Dam was not properly managed. I'm not aware of evidence that shows that, but they might say that. But it would also mean that if I were, say, let's just stick with Toyota, if I were Toyota and the insurance company drove around, saw that the infrastructure in the area had not been properly maintained and thus I had a higher level of risk, now I have to pay a higher premium, someone might well go to the provincial government and say, you're responsible for my higher premium.
Well, I think, unfortunately, that is indeed how such conversations tend to work. So you would think even in your own personal home insurance, your insurer would say periodically, let us just look at the state of the assets that have been insured so that we do not end up with a mismatch between the premiums that you are paying and the cover that you have. And I think when you have a company that's operating in an area where clearly some of the responsibilities are beyond your control. So obviously not every company has got the responsibility to maintain the infrastructure around it. Some of it is a municipal competence and other parts are a provincial competence. So you have to have an ongoing collaboration and a relationship that ensures that, look, everybody understands what it is that is the risk associated with operating a facility or a plant there. And if the state or if the province then isn't meeting its obligation, the insurer and the insured entity have to figure out what that means for them. And in instances where we keep seeing all of this materializing, whether it's the floods or whether it's the unrest that we saw in Durban, there's definitely going to be a renewal of conversations between the insured companies and the insured entities.
Part of this application, around 2 billion rand of it, is actually for the interruption of production. Toyota South Africa says it would have produced, I think, nearly 70,000 vehicles during that time. It couldn't do that because of the flooding. And that might in itself be an interesting thing because it's sort of a lack of production. So obviously the insurance company has accepted that, but a lack of production might be slightly harder to prove when it's the insurance company taking on the provincial government.
Yeah, and I think what you'll probably see is Toyota itself as the client, as the actual entity at the epicenter of this being dragged in to explain whether indeed the claims have merit. And I think obviously you cannot detach the company itself from the conversation because it will have to be the company that validates that, look, indeed we submitted a claim to our insurer based on what our assessment of the business interruption was, and the insurers have obviously accepted the claim. So for the state or for the provincial government to then allege otherwise, the burden of proof will shift strongly towards them. And I'm not sure how you can dispute that there was no production when there's a strong history of what the daily volumes were and what the number of days interruption was and how long it took to recover from that.
Khaya Sithole, thanks so much. Independent analyst, a fascinating case.
702. Stephen is on X.
At Stephen Grootes.
Oil prices edging slightly higher today. Reports from Bloomberg that US President Donald Trump and people around him may, in fact, now be planning a direct attack on Iran, and that US federal agencies have been told to plan for an attack. Professor Abel Eerstehuis is a professor of military strategy at the University of Stellenbosch. Abel, good evening. So, we have the military attacks by Israel on Iran and by Iran on Israel, but the US is a major and maybe to an extent the major player here. When we see reports that people in the Trump administration are drawing up plans for an attack on Iran, is someone sending a signal to Iran? And is this perhaps about trying to put as much pressure as possible on that country?
Stephen, I think there's two issues here. The big uncertainty was and remains the U.S. attitude to an Israeli attack on Iran. The conventional wisdom, I think, is that there are limits to the damage to the Iranian capabilities Israel can actually inflict without U.S. support. So, without U.S. participation, Israel may, in fact, not achieve its objectives. I think that's the first point one wants to make. The second point that I think one has to make here is that while Iran will want to hit back hard, it may actually conclude that it would be prudent to temper its escalation to avoid drawing the U.S. into a fight that it already risks losing. And so the war for me at the moment is as much about the future of the Iranian regime as it is about the future of its nuclear program. With Israel still very keen to get the U.S. involved. I think that's the three critical issues now for us.
When we saw those comments earlier, a couple of days ago now, from Trump saying he knows where, or we know as the Americans, where the Supreme Leader, the Ayatollah Khamenei, is, but we're not going to kill him yet. I mean, that would really suggest they're trying to put him under as much pressure as possible and say your regime won't survive. They're making it about that.
Yeah, I think, if one think about the U.S., I almost want to say the U.S. management of this whole conflict. There's the economic side that started off with sanctions. There's diplomacy that, prefers a deal and that is also warning Iran against delaying a deal, and that is now sort of threatening Iran with the consequences of not accepting the deal. And then there's the military dimension, and it is very difficult to really judge the American intentions with its military. We know the Americans are sitting with a huge capability in the Middle East area at the moment. Huge strike forces, and Dio Garcia, there's aircraft carriers in the area. And one of the critical issues for me is the Trump talking to actors in the area to specifically about a ground campaign. Now that is, for me, the Pakistanis in particular, that's an interesting sort of development for me, because I never thought that the Americans would actually think about a ground campaign. But then at the same time, I should say, I don't think there's a ground campaign on the cards. I think it is about the deployment of special forces to go in with precision special forces type of action to go and deal with the nuclear capabilities and the nuclear production capabilities that they haven't dealt with. In terms of the American military involvement, that's a big question still hanging in the air.
Professor Abel Eerstehuizen, thank you. Professor of Military Strategy at the University of Stellenbosch. Frank Blackmore is the lead economist at KPMG SA. Frank, good evening. I do appreciate your time on The Money Show. Oil trading obviously very volatile at the moment. It seemed to me that oil prices were slightly higher today. Is that a response perhaps to the suggestion that the US might be planning an attack, get more directly involved?
Well, I think at this point, the main driver as far as financial markets is concerned is uncertainty. And of course, rumors, as your previous guest spoke about, the US joining the war would mean an escalation in the conflict. And that would lead to more uncertainty in markets, hence higher oil prices. So I think you're spot on with that.
So obviously that would be the next kind of step to this. There's a lot of, you suggested, I think this morning, that the duration of this matters. It is entirely possible that some kind of deal is struck. And certainly it seems to me the US is pushing Iran as hard as it can for some kind of deal that would be a deal without surrendering. And that would see markets going kind of back to what they were before.
Yes, absolutely. I think there are two components here that we look at when we try and gauge the impact on global markets. The one is the duration, as you've just mentioned, the longer. the more severe the impact can be on the global economy, especially that we're dealing with a oil exporting country. We've just experienced sort of the Russian invasion of the Ukraine, and we know what that resulted in, sort of global inflation increasing. I don't think we're in the same bracket here, at least not from the food components perspective, but of course oil is a main driver of these costs around. And the second, of course, is the size of the conflict. If it was just Israel-Iran and other countries spoke about sort of ceasing the conflict as soon as possible, that would be one thing. But if countries took allied positions with these various, and we saw an escalation in terms of the number of countries involved, that's of course not great for markets.
The rand has been slipping slightly almost every day against the dollar since this started. And the dollar, I mean, it's not as safe a haven as it used to be. Is that going to continue? Or is it just people avoiding risk? Is it something else?
I think you're right there. It's again this uncertainty principle. When there is something like this geopolitical uncertainty about, you see a number of things. Oil prices now increase, especially because we're dealing, as I said, with an oil exporting country. You'll probably look at gold counters and see some risk on the table there. And of course, you do get that flight to safety in capital markets, which means that yes, the US may not be what it was a year or two ago, but it certainly is a lot more predictable than some of the developing markets. And unfortunately, we're part of that crowd at this point.
I mean, I would imagine the longer this goes on, kind of the worse for the rand, the worse sort of for South Africa. I mean, the worse for everybody. The uncertainty just gets, the longer it is, the uncertainty just gets worse. And the rhetoric is also, I mean, compared to what we've been used to in the past, pretty incendiary.
Yes, I think you're right. The longer the uncertainty continues, we get this rand coming through. We get the higher oil prices. South Africa is obviously an oil importer, and as well as many other goods that we have to import on the capital side, machinery, equipment, etc. Oil itself, once it enters the economy, is used for moving all goods and services around the country. The net result of just the uncertainty itself is a high level of inflation over time, and that may lead to holding interest rates, stable for longer, may even lead to increased interest rates depending on what happens to that conflict. And at this point, I think we hear the rumors, the US escalation, we hear the talk, but what we don't know is what exactly is happening in terms of the conflict, and that's never great for markets.
Frank Blackmore, thank you, lead economist at KPMG SA. Lots to think about, mull over as a result of all of this.
The Money Show.
The Markets.
Rudy van der Merwes, portfolio manager at AdviceWorks, one of the people, Rudy, who has to mull over all of this. I mean, it's so difficult to know what's going to happen. I realize markets have dealt with uncertainty before, but if you add that to the sort of Trump tariff uncertainty, and considering where we were just sort of 5 or 6 years ago, things are suddenly very uncertain.
Evening, Stephen. No, you're quite right. A lot of what we're facing here is event-based risk, and that's the one thing we can't predict. One can predict a lot of the risks around companies and economies in a normalized environment, but when there is an event thrown in there, either of human behavior or geopolitical risk of some sort, that becomes extremely difficult. And as was stated earlier, I've never really seen a situation where an increase in uncertainty has been positive for markets. So everybody prices everything lower when there's increased uncertainty, and then that's just where we unfortunately find ourselves at the moment. One just hopes there isn't a meaningful escalation here. There's no winner to any sort of nuclear confrontation. It's everybody loses, unfortunately. But generally, if there's a pickup in geopolitical risk because of some sort of conflict, that tends to wash over reasonably soon, actually sooner than one would think. So it doesn't tend to have very long-term impacts on markets.
I mean, there's a famous theory that's called nothing never ever happens. And basically the point is that markets recover from this kind of thing really very quickly unless something fundamentally changes, like, I don't know, a depression or a global financial crisis.
Yeah, so I mean, if there's a massive escalation in the aggression of the conflict, so if this remains a very contained regional thing, then it's likely to wash over reasonably quickly. If there's a major disturbance of either oil production or oil transportation from the area, that could have a consequence. I don't think Iran itself would have additional sanctions would necessarily make a lasting impact on that. But yes, so certainly massive escalation in conflict would absolutely have very significant impacts on all of us, and the potentially outlook for inflation and for growth elsewhere, and for financial stability in a system that's already constrained by very large amounts of sovereign debt.
Talking about that, Standard Bank actually mentioned in their sort of voluntary 5-month update today that a global risk has led to a less demand for credit. Otherwise, quite a nice update from them considering the situation everyone's in.
Yeah, it's a bit of a steady as you go type update. Saying that headline earnings seem to be set to continue to grow in the region of sort of 10%. They do talk about constant currency growth being higher than that, which indicates there's still pressure on some of the earnings from Africa. They do indicate that they expect that to lessen in the second half of the year, but they indicate that return on equity is still meant to sort of fall within their guided range of 17 to 20%, and it's probably likely to be more or less in the middle of that range, one would think. They are finding that balance sheet growth is lower than expected, meaning that there's not a massive amount of demand for credit at the moment, and that is important to banks over time. They do need to grow their loan books, if only to renew their books over time. If there isn't loan growth, then the good loans get paid off and you end up just with a bad one, so that the actual quality of books deteriorate over time. They do talk a little bit about margin pressure and that specifically on net interest income. At the moment, it does seem like fee and commission income is doing reasonably well. So at least the volatility in markets is obviously good for trading activity. So that is positive. But generally, I think it's for a very difficult and uncertain environment, it's a reasonable trading update.
Rudy van der Merwe, thanks so much. Portfolio Manager at AdviceWorks, bringing the time to 6:30.
Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, good to hear from you this evening on 011 883 0702 and 021 4460 567. You might already know that the market for diamonds seems to be slipping a little bit. Anglo's going through a process of selling De Beers. One of the reasons for that is that there's a sort of flood of, I suppose you'd call them manufactured diamonds on the market. But the market for rubies, you can get manufactured rubies too. It seems to be holding up quite nicely. Gemfield's reporting this week it was able to get $31 million in revenue through an auction of mixed rubies from its Montepoez project in Mozambique. Sean Gilbertson is the CEO at Gemfield. Sean, good evening to you. Were you happy with how it went? Did you get the amount of money you were hoping for from your auction?
Good evening, Stephen, and nice to talk to you. Yes, we were very pleased with the outcome. Prices were surprisingly robust, given the international conundrum that we presently seem to find ourselves in. We just wish that we had more rubies to offer, which hopefully we'll be able to do fairly soon.
One of the rubies you sold was around 36 carats. Now, I can't for the life of me transport carats and rubies in terms of size. I mean, is it bigger or smaller than a squash ball?
Oh, it's much, much smaller than a squash ball. And so you can put 5 carats into a single gram, and 5 or 6-gram ruby will fit very comfortably into a teaspoon. And for interest, the world record for a ruby at Bonhams, Sotheby's and Christie's is a staggering $1.2 million per carat, which makes it $6 million per gram. And that happened to be a 5-gram ruby, so that's a $30 million gemstone that would fit into a teaspoon.
Sure. I presume color and things like that, the quality of it, all of those things matter. You say that you're hoping to have more rubies coming in soon. Is the mine producing more? Are there more coming from other sources?
So actually, we've been facing declining grades over the last 2 years from an area that we've been focused on for approximately a decade. But the license area is very sizable at some 340 square kilometers or 34,000 hectares. And so we've really been constrained in terms of our processing capacity and unable to mine rubies from other areas on that very large concession. And so we have a second processing plant en route, due to finish imminently, and which is going to triple our processing capacity from 200 tons per hour to a whopping 600 tons per hour. And that will allow us to bring in ore from many other parts of the concession, thereby hopefully increasing the ruby production significantly.
Do you sell most of your product through auctions in the way you did this week? Is that sort of how it runs in the ruby business, or was there a special reason for it?
That is correct. So a little bit like the De Beers model, we specialize in selling rough gemstones. We produce about 25% of the world's emeralds and approximately 50% of the world's rubies. And we sell all of those in the rough form by auction. Interestingly, they go to quite different markets. So the emeralds go primarily to customers who hail from Jaipur in India, and the rubies go primarily to customers who hail from Thailand.
You mentioned that demand seems to be quite robust and you'll be able to meet some of that demand. What keeps demand for rubies going? I mean, you do get manufactured rubies. Is it just that there's a sort of, like there still is for diamonds, I'm sure, a kind of traditional market? We want it because we want it because we've always wanted it.
Two excellent questions in there, Stephen. The first is just on the subject of lab-grown diamonds and lab-grown rubies. Actually, the present conundrum that the diamond market is facing is a movie that we have seen before, both in rubies and also in emeralds. In fact, in the ruby business, lab-grown rubies came about in the late 1800s. And so the problem of synthetic rubies was one that our industry transcended by 1905, 1910, when they were manufacturing about 10 tons a year of lab-grown ruby. And similarly, the Japanese started making wonderful recrystallized emeralds from natural material in the mid-1960s. And so what happened over time is those lab-grown gems got better and better, bigger and bigger, and cheaper. And essentially the market's bifurcated. And today you can buy a lab-grown colored gemstone for a very small sum, whereas the natural gemstone manufactured by planet Earth remains extremely expensive. And we're pretty sure that the same thing, in fact, it's already started happening in the diamond business. So that's reason number one. And secondly, the other thing that's really helped the ruby business is that consistent supply, which historically really wasn't available, has helped to build the downstream market as more jewelers and retailers get involved in the very exciting colored gemstone story.
I presume when you buy a ruby, do you get a sort of certificate with it, some certification that it is made by Mother Earth?
Yes, indeed. So your retailer should ideally provide you with certification that documents where in the world your gemstone is from. And secondly, if you're spending anything like a reasonable sum of money on it, then an independent laboratory certificate should accompany your gemstone. And those are issued by a variety of different gemstone labs that should give you further comfort, A, that it's a natural ruby, B, hopefully, which country it's from, and C, also give you some indication as to whether or not the gemstone has been treated in any way in the supply chain. So many rubies, for example, are heat treated to enhance their color. and therefore, unsurprisingly, an unheated ruby is always much more expensive.
Sean Gilbertson, thank you so much. Learned a lot from that. CEO at Gemfields.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, I was following a little bit the press conference given by Floyd Shivambu today. As I speak to you now, he is still a member of Umkhonto weSizwe, and he says he will stay a member of MK despite the fact that he's starting his own political party. And you could argue he's doing to Zuma what Zuma did to the ANC, did pretty much the same thing. And there'll be a lot of commentary about this, and there's a lot of interest in it. I just wanted to say two quick things. The one is that this is part of the continued fracturing of our politics. We're going to see many, many smaller parties. There will be a lot of churn. Some of them will last an election cycle. Some won't even last that. Some will last 3 or 4, and then they'll move on. And that's just the way it's going to be. I'm not saying Floyd Shivambu's institutional party, if it comes to that, will necessarily be one of those, but I do just think we're going to see more fracturing. The second point, and this is a bigger and perhaps more important point, and I'd be interested in your view on this, is that it seems to me that the left, and many people have made this point, the left is currently disorganized. The SACP, MK, sort of, the EFF, sort of, kind of left-ish, or they claim to want radical change in that direction. All of these things are not running together well. And what that means is that we're not necessarily having a big force in this country, a political force that is united around changing economic policy to the left. Now, this might be good if you're a capitalist, and if you're a regular listener to the Money Show, the chances are that you might well be a capitalist, and that's fine. And so this might be a good moment for you to do whatever it is that you want to do, because there doesn't seem to be any kind of threat from the left to your interests. But it's not great for our politics. In a country like ours, with inequality like ours, we should be having a much more kind of right-left conversation. And I don't mean that in terms of race or identity. I mean in terms of economics. How much government intervention should there be in the economy? I mean that kind of left-right conversation. And I worry that we don't have that conversation nearly enough.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabotja, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the Africa Energy Forum 2025.
WhatsApp Stephen
On 072
702
1702.
We're talking of WhatsApp. How much time every day do you spend on WhatsApp? I made the point earlier that I've come to rely on it. I remember very clearly when someone first sort of sent me a message on SMS or I can't even remember what app it would have been, and said, you have to move to WhatsApp. And I said to her, I don't want to. And she said, you have to move to WhatsApp. It was in 2012, and I never really moved away from it. And it's a miracle in a way, started by a very small group of people. They used hardly any money to do it. They ended up selling it to Mark Zuckerberg for $19 billion. And it's provided the most immense free service to the world. I mean, it really is incredible. But now, I fear you're going to see some ads on it. Jan Vermeulen's the editor at My Broadband. Jan, good evening. I mean, WhatsApp's become so important that in some countries it's almost suspended before elections. Whole industries have come to live off it. And yet it's free, and that surely was never going to last.
No, definitely not. And the intention from WhatsApp from the beginning, before they sold to Facebook, was not to be free. They charged a nominal fee for using it. I think it was $1 a year or something, but then offered it for free in developing nations like ours. That's why uptake in places like South Africa is so high, is because we benefited from our status as a developing nation, as a developing economy. But when after Facebook took over, they made it free everywhere, because obviously they're in the business of building networks and then monetizing them later. And so it's been desperately trying to figure out how to monetize WhatsApp without chasing people away, because there's plenty of competitors waiting in the wings for Facebook to mess up.
and cause mass flight from WhatsApp to different platforms.
I mean, WhatsApp for me has been one of those things that's too good to be true. And I realize in this business, if something is free, you're the product, right? But it's actually quite hard in a way to sort of monetize. I mean, is this message from my wife about why am I late again really going to be brought to you by? I mean, I don't know how it works.
Yeah, no, and that won't work. People will move to a different platform. And I don't like the phrase, if it's free, you're the product. It's a gross oversimplification. But in the case of these social networks, the reason people say it is because it tends to be true in those contexts. And here, where Facebook is trying to tread carefully is it's trying to monetize the business aspects of WhatsApp. A lot of people might not have even encountered this part of WhatsApp, but people operate whole storefronts on WhatsApp in South Africa as well. And so it makes some money off of that. It makes some money off of selling API access. And so what they've announced here is an advertising product around its channels feature and around statuses. What exactly that's going to look like, I don't know yet. We've just not run into any of these. And so for that reason, I think there's also been interestingly limited interest from readers about this story. I think people are only really going to care when these ads become active and they become intrusive is when people will care. But if they are well implemented, then I think people will just carry on as normal.
The thing that WhatsApp has is scale. I mean, it's a bit like X. How X used to be is that it had scale. Everyone was on it. I mean, and arguably that's the problem that Threads has, is that, yes, people might want something that's like how Twitter used to be, but not everyone's moved at the same time. Now, with WhatsApp, this might be a little bit of a strength for them because you could move to Telegram, you could move to Signal, but you need everyone to move to the same thing together, and WhatsApp can probably bet that they won't.
Yes. This is the great thing about being the dominant platform in these internet ecosystems, is getting people. It's not actually good enough to be better than the dominant player. So if you're Telegram or Signal or whoever else, and you've got better features than WhatsApp does, that actually doesn't matter. Because of that inertia that this platform has. It already has the network effect, and getting people to move is actually quite hard. What it requires is for the dominant player to mess up in a big way. That's what we saw in South Africa with BlackBerry, when BlackBerry and BBM essentially handed the market to WhatsApp. And in other platforms as well. So, I mean, some of the flight we've seen from Twitter, as the example that you used, was after Twitter started messing up in certain ways. It still hasn't caused the total demise of Twitter, like it's caused the total demise of BBM and BlackBerry. But that's essentially how these platform businesses usually play out. Mixit, perhaps, is a good example in South Africa of a platform business that was a slow death because it simply didn't keep up with the times, and so wasn't running properly on people's smartphones. So that's an example of messing up, and then they lose the market.
The one thing that maybe has the scale, and I can't believe I'm about to say this, is SMSs. Now, I used SMSs a lot until 2012. If I recall, it might have been you telling me, it might have been someone else, but SMSs have sort of been updated. You can have groups, you can do all that sort of thing. But here's the thing, is that most phones still come with SMSs, and you get unbelievable numbers of free SMSs that no one ever uses on your contract. And would that maybe, with, I don't know, a very clever advertising campaign, could that maybe be a contender?
Yeah, the networks do have a killer app there that could be a contender to take over from WhatsApp if WhatsApp messes up, but they're going to have to clean up their act there substantially. The amount of spam I receive over SMS kill the product entirely. And so that is something that these platforms have to be vigilant about. Like, I've started receiving spam and stuff over WhatsApp, and if that kind of abuse of the platform is not handled well, people will go someplace where they're not being harangued by people that they don't want to talk to.
I mean, that's the thing on WhatsApp. You get a little option. Is this message from someone you don't know? Do you want to keep it? And all the rest. I mean, that's incredibly effective. And the ability to block people can be tremendously satisfying. It shouldn't be. You should do it with sadness every time. But it really works.
Yeah, exactly. And so those kinds of fine-grained controls that these platforms have in them. So, I mean, similar things are available on smartphones now. You have to add someone to your contacts list first, which is a problem, and then block them or put the number in a block list or whatever the case might be. And so those features are available on smartphones now. But yeah, that's part of the reason platforms like WhatsApp rose to prominence. They gave us features like group chats, like multimedia sharing, and voice notes, which was pioneered on a different platform, but which WhatsApp eventually incorporated, which are immensely popular in South Africa. And SMS just has not kept pace. And in fact, once those free SMSs run out, they start becoming quite expensive. And the new technology that's supposed to take over, RCS, is still struggling to be even properly implemented in South Africa, let alone trying to push for adoption to rival WhatsApp.
Jan Vermeulen, thank you so much. Editor at mybroadband.co.za, just after 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, powering Africa's potential from ground to grid. Proud sponsor of the Africa Energy Forum 2025. Good evening. Welcome to the second hour of the program. We'll be talking in investment school a little later. Quite looking forward to it, actually. Value in banking shares. How does your bank actually make its money? There are lots of different ways. Yes, it charges you interest. Yes, it may or may not charge you fees. But how does it actually make its money? And I was interested in what Rudy was saying earlier about how, if you have a bank and you don't actually get new loans coming in the end, the good loans get paid off and you're left with just the bad loans. So things do need to sort of take over. We'll focus on that a little bit in investment school this evening. And don't forget small business. We'll be talking about the G20 and small business and YouTube Shorts. We'll talk about that in just a moment. Good to hear from you this evening on 011 883 0702 and 021 445. 021 446 0567 and voice notes this evening on 072 702 1702. For the moment, of course, your voice notes come to you via WhatsApp for free. I would like to know what it would take to force you off WhatsApp. And I think what it would probably take is, yes, a lot of spam and nonsense. I think it would also take my family leaving WhatsApp, actually. It's really about everyone else. You go where everyone else is. And that's maybe the whole point of a social network like this. And one of the points, and I've made this point in many places, I don't know if I've told you, but I've said it in many places, that one of the things that scares me about WhatsApp is because it's encrypted, right? End-to-end encryption. And on groups, if you're not a member of the group, you can't get in there. No one can, unless you have someone's phone. And what that means is that people are receiving information from lots of different sources, and no one knows. No one's able to assess that. I mean, in the past, you could tell what the lead news story was in the radio or the TV. You could tell what the newspapers had been talking about. And you could, predict an election result based on that. You can't do that anymore. And that scares me sometimes, I must tell you.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, I'm sure you've noticed on YouTube, if you watch it ever, if you are maybe using shorter videos, you often end up holding your phone sort of portrait rather than landscape. But short videos, their shorts now have 200 billion daily views. And of course, we have TikTok to thank for it. Siphumelele Zondi is our tech expert. Siphumelele, good evening. YouTube, the first video was what? That man outside the zoo? It's really changed since then.
Oh, totally, it's changed. Hello, Stephen, and thank you very much for having me again. So you just spoke about YouTube Shorts, right? Because there was a time when YouTube was all sorts of things where people would go there for all kinds of tutorials and, hello, welcome to my YouTube channel. Today we're making whatever we're making. This is how you would tie a tie, for example, at a certain point in time. And then there were music videos at a point. But today we are finding out that it's actually the short video format of about 90 seconds long that people are looking at. So the length of time it takes people from the beginning to an end of a video has shortened quite a bit in how they interact with the platform.
So, okay, if videos are shorter, you're going to watch. If you've got 10 minutes to kill. Let's just say you're waiting in a queue or something. And you've got your earphones, you're going to watch something on YouTube. I mean, you should read a book, but you're going to watch something on YouTube. So, yes, if you've got 10 minutes, you could watch 4 movie trailers in that time, or you could probably watch 10 to 20 shorts. But with the shorts, yes, there'll be advertising and all the rest. I don't know if the message really goes into the brain in the same way. You could ask someone 5 minutes afterwards, what did you watch? And I would have no idea.
It depends on what it is, right? Because, yes, it does almost feel like fast food, if you will, or snacks. If you're hungry, and you're too busy to make something, you probably might have a chip or two, but you'll be hungry again a few minutes later. So it's exactly the same concept because, and also, you mentioning 10 minutes because sometimes you sit down thinking you're going to watch a video or 2 or 3 while you're killing those 10 minutes. And we do know that you end up binge watching these videos and you sometimes find yourself that you're there an hour, 2 hours later, just scrolling away. And you probably don't really remember much of what you were going through when you were scrolling because you're not engaging with the content. Yes, you might look at it, find it interesting, find it peculiar. There is stuff you're going to remember, but you're not really going to remember a lot of it.
I mean, there's got to be a limit to what you can fit into 20 seconds. I realize that humans are endlessly inventive, but still. I mean, did this really start with TikTok? I mean, are we seeing the same format? I mean, if I were TikTok, I'd be pretty irritated that YouTube did this, but I would also have known they were going to.
Everyone is doing that. So TikTok, yes, is the platform that changed. And in fact, the TikTok algorithm seems to still be the best one when it comes to this because it seems like people can still disengage quite easily on other platforms. And maybe it's because YouTube still has the longer video format as well, where you can watch a podcast or 2. We have heard that YouTube says a lot of people are watching podcasts on YouTube as well nowadays, or you have it playing in the background. So you can pull out of it, go to a podcast. Whereas on TikTok, it's a different ballgame altogether because it's all there is. It's these short videos and you just keep on scrolling and consuming them, and then it figures out that maybe you need to leave your home country and go to similar content but in a different country. So it doesn't seem to have hurt TikTok that much, but it also seems to have grown the number of people that engage with the other platforms. Because there was a time when YouTube was wondering what they were going to do with Gen Z, but it seems like Gen Z has gravitated towards YouTube as well because there are other formats of video that they can look at and the lengths that they can look at, as opposed to just the longer stuff that existed before.
Someone said to me once, and when I first heard it, I couldn't believe it, but the more I've thought about it, the more I think maybe they're right, that TikTok and short videos are the end of social media, by which he means that there is nowhere else to go from here. So it started actually with blogs, can you believe? It started with bulletin boards in the 80s, but that was a form of social media in that there were discussions. I mean, it was really the creation of the internet. Then you went to a kind of short form blog, so Twitter. Then you had videos, so YouTube. Now you have a short form video, so TikTok and shorts on YouTube. And there's kind of nowhere else to go. And I kind of wonder if maybe that's true. There's nowhere else to go from here.
It seems like with video, because people are not really reading that much, right? Because when you think about the earlier social media platforms and what you'd find there, think about Facebook, for example. It was photographs and engaging with text. You think about what Twitter was. It was mostly text and short characters as well, not reading the long format stuff. But now it's just video, and people are reading less. You mentioned earlier that you should really be reading a book if you have time to kill. But people are not reading books because if they have time to kill. So where do you go? I even wonder in terms of the other content, for example, because sometimes on a Saturday, on a weekend at night, you could kill time by watching a movie as a family. But we don't do that anymore. We sit on our devices and in different spaces too, and we're watching different content in those different spaces because of the size of the device as well, because it can't be the big screen. Yes, you can connect it to the big screen, but it takes away what it's meant to do, which is being a personal device or personal media. So you sit in different spaces looking at this on your own and looking at different types of content within the same home. And so where do you then go after that as well? And I do know that at some point, Audience Cinemas out in the UK, we're trying to promote cinema as something that the family or that the community could do together in order to get people back in there. But it doesn't seem to be working that much, because if people are now, if billions and billions of videos and billions of people are now engaging with shorter content, will they go back to the longer format, the longer film, the longer documentary that explains things at length and in depth and actually forces you to engage with the content?
Siphumelele Zondi, so much more to talk about here. Thank you, our tech expert. A couple of years ago, I was standing in a queue at a shopping centre to go and do something, and I was just waiting to get something photocopied or something. And I noticed a woman behind me who was standing in the queue, and she hauled out a bit of knitting from a bag and started knitting. She had her knitting needles, and off she went. A few minutes later, I was standing at a cashier in a supermarket, and she was standing behind me again, and she was also knitting again. And I said, "I'm so sorry to interrupt, but we were standing together earlier, we're standing together now, and I can't help but notice that you're doing knitting while standing in the queue." And she said, "Well, actually, I spent so much of my day looking at my phone, and I didn't feel happy about it, because watching a video or anything didn't make me feel happy. Social media didn't make me feel happy. WhatsApp is communicating with people, and I didn't really want to do that right now. So actually, I do this instead, and it makes me feel happier because I've done something." Gave me a lot of food for thought, that, I must tell you.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabotja, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place, whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
702. Stephen is on The Money Show.
6 to 8 p.m.
Small Business Focus is brought to you by Capitec. No matter the size of your business, Capitec's got you. Well, one of the big features of the year is the G20. There's an entire series of meetings, but they're being held here. And then, of course, the big meeting towards the end of the year. But there's now a call to make sure that the G20 is, in fact, able to help smaller businesses. Longqedo Ntwentwe is the Managing Director at Vantage Advisory. Longqedo, good evening. We all know our smaller firms battle to get going. Access to capital is a major problem. Is the G20 a moment, a forum maybe to give that a bit of attention? There must be some synergy here.
Absolutely. Good evening, Stephen, and good evening as well to your listeners. Yeah, Stephen, look, we're in a youth month, and the G20, by the way, and so some of the working groups and engagement groups have been formed, and the dialogues are actually underway. And this is a very important forum for South Africa. And one of those reasons, I think, for listeners as well, why G20 is such a big deal. You'll be aware that the members of the G20, they include some major economies that represent about 85% of global GDP and over 75% of international trade. So a forum like this really shapes the global economic governance and the decision-making, especially at a policy level. And that is why there is that narrative and the drive that we're putting out there to say, look, the SMEs and the youth also have to be at the forefront, because some of the recommendations and the frameworks that get agreed upon, they do become, or they do shape the policy and the policy level and the implementation, therefore. And one of those, of course, especially if you want to promote, small businesses and the youth, is really access to capital. And therefore, we know that capital, especially in Africa, is not something that is easily available for small businesses. So therefore, it's very important, I think, for the South African G20 presidency to ensure that we don't use this as just a diplomatic milestone, but as a strategic opportunity for us to reshape some of the narratives and to ensure that the small and medium businesses as well are not left behind.
I mean, you forget how important smaller firms are, even in big economies like the United States. And there are probably some examples, some opportunities for us to learn, but I think from others, but there's also a lot of commonality in the discussion. You know, there are plenty of things for people from different parts of our economy and different parts of other countries' economies to discuss here. Access to capital. Keep coming back to that, don't we?
No, absolutely. Because at the end of the day, what is important with these dialogues is that there are countries that have done extremely well in terms of really bringing small businesses as well. For instance, take India, with an impact that they've done, especially with electronic payment systems, the technology, and what it has had to government and the tech ecosystem just in that particular country. And that's what now we need to be lending to some of these countries that have spearheaded some of the actions, or that have learned from some of those frameworks that have been committed to some of the previous G20 forums that have been held before. So therefore, it's not a matter of just sometimes reinventing the wheel, but it's to say, how do we learn from other countries and really come up with frameworks that can really assist us? For instance, you can have like risk-sharing frameworks where you incentivize funders to lend to youth and women-owned businesses. Therefore, in that way, you're driving so much that the risk capital that we always complain about, it does come to South Africa, and then we have reforms that ensure that whoever that lends or supports SMEs or funds SMEs, there is an incentive in relation to such things, right? So those are the ideas that we need to really get from this. But again, the youth of South Africa have to really take advantage and participate to some of these forums and dialogues that are currently underway. Because what you don't want a situation, again, where at the end of the year, there is no return on investment from South Africans, because they're going to be asking, what has been the return on investment? You don't want this in the next 5 years. We still ask ourselves after we spend hundreds of millions or close to billion rands just to host this event.
One of the big debates over the last week has been the commentary around the informal sector, how we define employment. You'll remember how it started, of course. We could learn from some other countries about how to better enable our informal sector.
You know, look, I think the experts, they did react heavily, of course, from those sentiments. And we've been clear that informal economy is big in South Africa, and we have to really bring it into the fore. And I think that's what the drive or the sentiments that were shared earlier by one of the CEOs, to say, look, let's really try to bring the informal sector into the fore. Let's try to recognize it. But of course, I mean, your experts would have gone very, very hard in terms of the views that have been shared. But from my side, I'm very proactive in terms of small and medium businesses and to promote them to really be supported. And it is the right platform. These are the discussions that we need to have as a country. And we say, how do we really bring them closer? And how do we really start to support them, even though they're a bit informal? And of course, I think businesses that will take the risk, they're going to really reap heavy rewards once they start to really understand and really not to be too bureaucratic around the fact that, they don't have some of the formalities that you need, but still support them. And the countries like Mexico, they've done that extremely well as well in terms of supporting some of their small businesses around that particular framework.
There's so much to look at, isn't there? Longcero Mtwentwe, thank you. Managing Director at Vantage Advisory.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabotja, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place. Whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the Africa Energy Forum 2025.
The Money Show.
Investment School.
Well, I know you use a bank. Well, I'm presuming that you do. I kind of hope that you do, because maybe what's under your pillow isn't that big. But you may be surprised to learn at how many different ways banks make money. They're not all from you, quite a few of them are. But one of the reasons we're having this conversation is we're going to look more deeply into banking shares in investment school this evening. Vincent Anthonyrajah is the CEO and co-founder at Differential Capital. Vincent, thanks so much for coming in. Okay. How do banks make money? Let's just start there. When I deal with them, I think of two ways. The one is they charge me interest on loans, so let's just say my mortgage, and they also then charge me a fee on my accounts.
Yeah.
What else do they do?
Good evening, Stephen. Thanks for having me. Yeah, that's right. I think, but banks have evolved to become a lot more than that. So I think in our day-to-day lives, that's what we experience, the interest rates that they charge us. But don't forget, there's another side to it. Remember, they also pay you interest on deposits that you have at the bank. So if you had to sort of simplify at a very high level how banks make money, they make net interest income. So what they charge the people who've borrowed from them and what they pay to the people who've placed deposits with them. And then there's a whole category of fees. And I know lots of South Africans love to whinge about it, but maybe if you invest in a bank, it's your way to get some back. And the other thing to know about South African banks is that they've actually become diverse financial services companies. If you look at a bank like Capitec, only 50% of its profit now comes from banking. About a quarter comes from insurance, and a lot of the other banks have become like that as well. A large amount of the profit comes from insurance, and simply because it's easy for a bank who's already got you in store, or not in store, who's already got you through their apps or whatever it is, and the cheap way in which they can on-sell insurance to you means it's highly profitable. So insurance is a big component, and the other interesting growing component, in banks like Capitec as an example, basically they call it value-added services. So airtime, electricity, all sorts of things like that they're charging for on the side, which have become really big businesses. And then, you could see one of the banks becoming a bit of a telcos player over time. So because they're so close to the consumer, banks are becoming quite diversified compared to how we traditionally experience them. And that's at a very high level. There's another way, a cool way of breaking them down is to the various parts of the economy in which they make money. And if you take a bank on the one extreme like Capitec, almost all of its profits come from individuals.
Yeah.
Probably about 5% come from businesses. Whereas if you take something like Standard Bank, is completely on the other end of that spectrum. I think something like 75% of their profits come from either business banking or corporate and investment banking, CIB as they call it. And we can chat about that in a bit. And only 25% comes from retail, banking, people like you and I. So that's the other thing to compare about, is that not only are the types of profit that we spoke about, but it's also where they make their money. And then there's also geography, which is also interesting to think about. You've got banks like Standard Bank and Absa, which a large part of their profits now come from outside of South Africa, being rest of Africa. And then, some are more domestic, like a Nedbank and a Capitec.
Okay, so if you are focusing, as Capitec does, on individuals, you make a lot of money. You make a little bit of money from a lot of people.
Sure.
If you're doing corporate banking, I imagine it's more sophisticated. You need to offer, if you focus on that, you need to offer more solutions to more complex problems. Stephen Grootes Incorporated obviously needs to move money from Liechtenstein to Switzerland, and it needs to do it not on a plane. It needs to find another way around it. And so things like that. I mean, you get into all sorts of very complex things. So are you making a little bit more money from sort of fewer clients?
That's generally correct. Fewer clients for sure, but because some of your clients are large corporates like an SAB Miller that will have operations all over Africa. And a simple example which I give people is, it's actually scary how much profit banks make from something as simple as foreign exchange transactions. So when one of these companies decides to take goods and repatriate what the proceeds of their sales from Zambian kwacha into dollars and then from dollars into rands to bring it back, or whatever it is, there's a bank in between all of those transactions making a spread. So that's one area where servicing those kind of complex clients adds a lot of value. And then you get all the way to the extremely complicated end where many of the banks service hedge funds, investment managers, where the types of services they offer them are things like derivatives and all sorts of strange and wonderful financial instruments. And then the banks will make a margin on that. But generally, because these are very large transactions, it becomes profitable for the bank. So even if they add, as little as 10 basis points to half a percent on the transaction, when it adds up when it's large volumes.
There is at least one bank that says it doesn't charge fees at all.
Yeah.
And it won't be the last. And doesn't that mean some banks, particularly ones maybe like Capitec, are a bit vulnerable to losing quite a big portion of their income?
Possibly, Stephen. I think you're right. In terms of pressure on banking fees, so transactional fees and things like that, chances are we're going to see pressure on that. And certain banks will be more vulnerable than others. But I think it's also part of the reason some of the more established banks have tried to diversify themselves away from that. The question we should ask is then how would they make up for it? And this is an interesting one. In South Africa, which is an oligopoly, I often wonder whether you end up possibly paying less in terms of fees and you feel better about it. But could it possibly mean that you end up earning less on your deposit savings? And so there's other ways that the banks will probably make it back. So I'm not really sure the competitive environment is strong enough for all of that to be passed on to the consumer. I just wonder whether the banks will claw it back in other areas. Because at the end of the day, it's a supply and demand issue. I mean, at the end, in South Africa, the bigger demand area for most consumers is actually for loans. So you might find that, fine, you don't charge as much on the account, but when you do decide to take out a home loan, all of a sudden there's a few extra fees there, etc., or a higher margin than you normally would have. So that's just the cynic in me. And when you think about it as an investor in banks, certainly South African banks is one of the positives. It's that, it's not the most competitive space out there.
So, okay, Capitec for the moment, which everyone talks about all the time, and yes, the book about it is very good, but it's been growing, right? And it's been growing in the number of accounts. But at some point, that growth will slow. It may not stop, but it will slow. And won't that then make it like the other banks, the other members of the oligopoly, because there's no room for it to move, and won't that stop its share price growing?
So I used to be very cynical about Capitec because I used to view them as a bank as well. Sort of my views have changed over the last few years on a number of fronts. So if you look at the average interest rate, so if you go back 10 years, I think the average interest rate spread that Capitec charged its clients was as high as, I think, 18%. I stand to be corrected, over prime. So it's prime plus something ridiculous.
Sure.
That number has dropped a lot. So they're not making as much spread on the loans as they were. So de-risking the loan book and things like that. But they've innovated into other areas. So insurance is a simple example where it's actually quite scary, Stephen. If you look at Capitec now, they make about 3.5 billion rand profit from funeral cover largely, or insurance. If you think about it, Old Mutual's entire profit is about 6.5 billion, somewhere there. So they've grown to half the size of Old Mutual. So this is the power now when you look at some of these banks, which are actually really strong digital platforms. So if you look at someone like Capitec, where can they continue to grow in? Business banking is an area which probably deserves a bit more competition. And then the other component which they've it's not just dabbling anymore, they've actually been quite successful in is Capitec Connect, the mobile service. Again, if you think about the millions of people that use their app now that can buy the data off your, mobile, whatever. I think there's more areas that they can grow. Certainly in the medium term, that's my view. There are some other risks we can chat about, but I think a bank like Capitec certainly has got a lot of room to grow. And it's similarly the case for a lot of the South African banks. If I look at the case of Absa and Standard Bank, the rest of Africa, their exposure there is really good, and I think that's where, if you take Standard Bank's rest of Africa business, a few years ago I read a great report from one of the sell side analysts, which showed how that business has grown faster than Capitec, and delivered even a higher return on equity. So you've got a hidden Capitec inside of Standard Bank that's growing really quickly. And I think, ABSA's business that they bought from Barclays many years ago has a really strong brand in many parts of Africa. And I think that will continue to grow well. So I think when you look at the various banks, I think the South African banks are interesting. People always think of them as being operating in a country that's not growing. But somehow they've managed really well, all of them, to grow better than GDP, nominal GDP.
Hasn't that happened in other countries too? There's something about banks because of the way that money has changed. We haven't even discussed crypto, and I don't really want to, but because of the way that we talk about money has changed, and what you can do with it has changed, because they're so close. It's a bit like, social media. They've just been in they're riding a wave, and all they need to do is ride it. I mean, they do need to ride it well, but they're just riding this wave.
Yeah, one way of looking at it, a justifiably cynical way, is to think about, banks are exposed to monetary supply growth, which is, probably grown faster than nominal GDP. So there's definitely that element, but also in certain jurisdictions like Europe, regulation has throttled those banks, and so you've got large parts of the world where banks aren't really growing, due to excessive. Let's put it, very conservative regulation. Let me not use the word excessive.
So, here we have a little bit of an oligopoly, as Sipho Patiana will tell you.
Sure.
And we have quite tight regulation.
Yeah.
Does that make it a safer place to invest than other sectors because of that tight regulation?
Sure.
Checkers could probably appoint within reason almost anyone to be CEO, but the Prudential Authority would stop, I could be CEO of Checkers, but the Prudential Authority won't let me be CEO of ABSA.
Yeah. There's two elements to that, Stephen, and you're right. I think, firstly, the solid level of regulation that's been introduced over the last few years has, observably reduced the number of bank defaults. So I think stand to be corrected, but I can only think of VBS and African Bank over the last 10 years, or around that period.
I think that must be right. And then sort of Italab has never been a bank.
Yeah. But then if you go to the 80s and 90s, I think there was one bank going bust every 2 years. So I think there's that element in that it's made a bank a lot safer place for depositors, and I suppose the same holds true for shareholders, importantly, as well. It's made it a lot safer an investment. But then there's also the other thing is, because of this tight regulation, it's increased the barrier to entry. So it's also more difficult. And so, I think the other question to ask is, the other players that have been trying to get into this. So you mentioned the bank that's trying to cut its fees down to zero. They're having to take those kind of approaches. And then also you have the insurers, which I say that's a real debate as to whether they do well, because they're spending huge amounts of capital to invest in a highly protected, highly regulated industry. People often forget, they think that the banks, the SARB, the Prudential Authority, just regulates how much capital you need to hold and those kind of things. They get down to your banking systems, your cyber security. So the amount of investment that you need to do to build a competitor is huge. It's huge.
We're speaking to Vincent Anthonyrajah this evening, the CEO and co-founder of Differential Capital. We're talking about investing in banking in investment school tonight.
Travel isn't just about destinations. It's about the people you meet, the cultures you immerse yourself in, the stories you carry home. I'm Relebogile Mabotja, and on my travel feature, I take you on a journey beyond the guidebook. Each week, I connect with fellow travelers, insiders, and storytellers to bring you the heart of every place, whether it's a hidden gem right here in South Africa or a dream destination abroad. Join me as we travel through conversations, memories, and inspiration. Listen wherever you get your podcasts.
The Money Show.
Investment School.
Should you invest in banks? How do you know? The business of banking and investment school this evening. Vincent Anthonyrajah, CEO and co-founder of Differential Capital. Vincent, if you own a share, you obviously want to get dividends from it. What kind of dividends can you expect for a bank? That would be, if you had some money, would you put it into Bitcoin? No dividend, but Bitcoin. Would you put it into a bank? A dividend, but it's a bank.
Yeah, so if you bought shares in banks today, I think the average sector dividend yield is sitting around 7-ish%. With some of the banks, because their share prices are so low, I think for ABSA you're getting probably a dividend yield of around 8-9%. Similarly for Standard Bank, even a bank like FirstRand, which typically has been of the bigger banks, the faster growing one, getting dividends of around 7%. I think Capitec is the one with the low dividend, but that's where you instead of getting a big dividend, you're getting the growth. But yeah, I sometimes wonder, with investing in banks, they're reasonably safe, regulated. If you put the money on deposit in a bank, you probably would get a lower interest rate than you would a dividend. And remember, a dividend for most individuals is not, the only tax you get on it is your dividends tax. So that's an after-tax return that you're getting. Whereas if you earning interest, you're going to have to pay income tax on it, most likely. So I think the value proposition of bank shares is really good, especially when you consider the risks.
If you so there will be another question around whether you spread your investments across a whole lot of different banks, whether you put it into one, we all know which one, or if you sort of manage the sector slightly differently. And where I'm going with this is that if there's a crisis in one bank, other banks are often affected or they're somehow exposed to it. And we saw that with the great financial crisis. We didn't lose any banks here, but in the States, I forget the one, but it was a big one that eventually disappeared. Was it Bear Stearns?
Yeah. Lehman Brothers.
Lehman Brothers, yeah. I mean, I still sometimes quote them as an example, and I sort of forget they no longer exist anymore because surely a name like that's going to be so solid, right? So do you sort of invest in one? You just pick one and go with it, or do you spread it across the banks, or do you have to just think about it a little carefully?
Look, my approach would be, in South Africa, we're kind of spoiled for choice. I would spread it across because they each are specialists in different areas. And you're right, Stephen. I think they are. Because of the oligopoly, all the banks, remember they've got interbank deposits, so they're all interlinked with each other. So if one does fail, it does pose significant risk, especially if it's one of the bigger ones. It does pose risk to the system. So, I think you can diversify it by having exposure to many of them. But I suppose, if you want to just think about bank risk for a second, what are the two key risks you need to be worried about? There's the famous one everybody kind of understands is credit risk. It's lots of their loans going bad and people not paying them back. And it's an important thing to bear in mind is that's the risk with banks. When the macro economy is doing badly, interest rates are high, inflation is high, people and even businesses can't afford to generate that much free cash, and then they start defaulting on their loans. And that's the risk with banks. They are cyclical like that. The other risk, which is the more difficult one, at least historically, to quantify, is what they call liquidity risk. If your depositors get spooked and decide to take their deposits quickly, there is a large amount of liquid assets that banks need to hold, but no bank can withstand a full-on run. Yeah. That's why you have to be very careful. The regulators, comes down hard on people that spread rumors and things like that. And so that's the other risk with banks, South African banks and banks around the world. I don't know was it 2 years ago, Silicon Valley Bank, the big US bank went, and it had a liquidity problem really. So it had issues around the quality of its assets, but then when large depositors start pulling their money quickly, forcing the bank to liquidate its underwater investments, it just causes chaos, So those are the two risks that you're really worried about, and I think it makes sense to diversify amongst the various banks that we have, especially considering the geographic diversity. Remember, you've got Investec, which has got developed market exposure, just like FirstRand. You've got Standard Bank, ABSA, and to a lesser extent Nedbank with the rest of Africa. So that's the other thing that you get when you invest in a basket is a really diverse set of strategies and assets that they're exposed to.
We've got literally 30 seconds left, but part of me sees the role that banks play is getting more and more complex. There'll be more products, more this, more that. Other part of me sees payment systems becoming a lot less complex because it all happens so quickly and because some banks are becoming just a little bit more simple.
Yeah, that is going to be a big risk, Steve. So It's one to watch. Banks make a lot of money on your credit card swipes and things like that. So the fintech encroachment into that sector is something to watch. So banks are continuously under threat, fees, those kind of things. But your defense, to some extent, is the oligopoly, in my view.
Vincent, thank you very much indeed for coming through. Really do appreciate it. Vincent Anthonyrajah is the CEO and co-founder at Differential Capital.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the Africa Energy Forum 2025.
Well, that's it for the Money Show this evening. US markets, of course, closed today. But as you know, the whole focus is still going to be on the situation regarding Israel, Iran, and the United States. Certainly the big driver of markets, I think, for the next little while. Also, of course, just have to see how things play out here. Friday generally a slightly quieter day. Always got to check sends at 5 o'clock on a Friday, I've noticed. Good of you to be with us. It's just gone 8 o'clock.